Wednesday, November 30th, 2022, Maneco 64, home of alternative economics and contrarian views. I've spoken about this quite a few times. I was warning about an economic collapse in the UK in July last year. And is it just the UK, of course, that is collapsing economically? Of course not. We've got the countries in the European Union doing so. I think the US will eventually do so. Most of the Western countries. And we're going to focus though on the UK because that's where I am. That's where a lot of you are. And last year, the title of my videos were UK economy on the brink. This year, UK economic collapse continues. This is going to be a part 4. And I'm continuing to see things that point to more pain for our economy. And unfortunately, I don't think the political class, as it is now, will try to solve the problem. And we're going to look at why. So before I start, I like to say that I interviewed Paul from the Sirius Report. And I published the interview yesterday around 5 p.m. And it's a very long one. He's talking about China. He's talking about what he thinks is happening there. Not just in China itself, but a lot of what he talks about is to do with the West's relationship with China, what's going on in the world geopolitically. Do I agree with Paul on 100% of his views? No, but I think he does very good analysis. You might not agree with him on who's to blame for all that's happening in the world. He tends to think it's more by accident and incompetence. I do agree with that, but I think there are bigger powers out there that are pushing an agenda. He doesn't seem to think so, but I still think it's a good point of view. He has good way at looking at things. So I'm going to put it up in the cards, the link to the interview that was published yesterday, if you haven't seen it yet. And yeah, so with that, let's get back to economic collapse. And I said that I don't expect the political class, Labor or conservative or Labor, to be of any good. And why is that? Well, because they think short term. I did an interview recently with the CEO of Barton Gold, and we spoke about that, about government interference in the economy and politicians, that they don't seem to do the right things. And he made a good point. He said, while politicians think in 2-year terms, they think of the next election, and they do everything to get reelected, and they don't look at the long-term health of the country. And unfortunately, that's what's going on. And the other reason why I would say we're going to continue to see economic malaise, you might want to call it collapse, is because in the last 100 years, especially after World War I, government has become too big. Government spending as a percent of GDP in the UK is just over 50%. In the US, is just under 50%. But if you look at these numbers from the 19th century and even up to like the decade of 1940 in the US, for example, government spending as a percent of GDP was less than 10%. So I think the disease we have right now is too much government. And when government interferes in the economy, in the free market, it disrupts everything. When they have too much power, the only hope I have is that it gets so bad that we get a complete collapse, not just of the economy, but the currency, that the governments eventually won't be able to spend anything in real terms. And as you can see, countries like Venezuela and Zimbabwe, look at their government spending is really low. Well, and why is that? Well, because they've destroyed their currencies. And unfortunately, that's the only hope, because I don't see politicians trying to get this proportion of government spending down. Here in the UK, we've had a new budget, and it's nowhere close to doing that, because it's punishing the private sector, and it's going to make it worse because the economy is not going to grow as much, the private economy, and they're going to keep taxing. So before we look at the markets, just wanted to show you some signs of the economic collapse that's going on in the UK. Yeah, a lot of people are going to argue it's because of Brexit and the war in Ukraine and everything, but I've been warning about this for years. It's mostly because of big governments and inflation as well, because the Bank of England has obliged. They're supposed to be independent, but if they were independent, they wouldn't have kept their QE and their zero interest rate policy for almost 14 years. They've been to blame as well. But and when I talk about economic collapse, I don't mean to say that we're going to have anarchy in the streets and nothing's working. It's just the functioning of the economy is getting more and more disrupted, and we haven't seen this. I've been here since 1992 in the UK, and I've never seen things not working as they are. Yes, we've had strikes in the past, but they weren't very disruptive, and they didn't last very long. But now we've got strikes everywhere, post office, rail, and now we're hearing that we're gonna have NHS nurses strike. So there you go. You're gonna have ambulance staff to hold first strike for 30 years. And a lot of people will say, well, we need more spending, government spending in the NHS. But the government already spends like 160 billion pounds a year on the NHS. How much more do we need to spend on the NHS? Where is that money going? Am I saying the NHS needs to be privatized? No, my point here is that government is too big, and yeah, it's getting to a point where the private economy has been crowded out, and that's why, unfortunately, I continue to see things getting worse. Our foreign policy also is not helping, of course. And then there's this article here, and again, government interference in the market. A lot of people say, well, we've had free markets for too long. But if you look at those government to GDP spending data in the last 100 years plus, government has gotten too big. So it's basically destroyed a lot of the free market. So if anything, no, we need less government and more free market. And unfortunately, a lot of people think the other way. They think we need more government, and that's why I'm not too encouraged, because I think in the next general election here in the UK, we're going to get a Labour Party, and yeah, they're just as bad. And I think if anything, they're going to increase government spending even more. Not that the Tories haven't, but yeah, another interference here in the energy market. And it looks like it's going to backfire. So Centrica is the company that owns British Gas. They're saying that the Bulb sale, and Bulb was a energy company that had to be, energy provider that had to be nationalized. It looks like it's going to cost billions and billions of pounds to us, the taxpayer, at least £6.5 billion. It says, though, that the Bulb sale risks future stability of UK energy market. And I'm going to put a link to this article under archive.ph so you can read it. And the energy market in the UK, some companies, the company that's supposed to buy Bulb, Octopus, they're actually using customers' funds to finance this takeover of another bankrupt company reminds me of FTX. So how does it work? How can they use customers' funds? Well, because a lot of times people have positive balances with their energy providers. So they're using that to finance their operations and the takeover of a company that has a huge hole. So Centrica is trying to warn the government. I think the government is not going to listen because that's the way they are, incompetent. And in that case, you're right, Paul, from the Serious Report, there is a lot of incompetence. So that's why I don't see things improving. Does that mean it's the end of the world and things are bad? No, there's always opportunities out there, even in such an economy. But you need to be aware. That's what I try to do on this channel. Be aware of what's really going on. And this is my opinion, of course. So when they come out and say, well, the economy is doing great, it's going to do this and that, I would tell you that you need to always look at government spending to GDP. Yes, if that number is dropping massively, like from 50% now to, let's say, 45 in the next year, that's a good sign, but it's got to keep going. So just wanted to show you, because we're told, and I'm not trying to defend China or Xi Jinping, but I'm just looking at the bigger picture. We're told that China is a communist country. Everything is like run by the government, by central authority. But look at the government spending as a percentage of GDP in China. Well, it's 36.98. And in the UK, where are we? Well, we are at 50.273, and we have a huge deficit as well. We're spending a lot more than we're taxing. So are the Chinese, but their government spending is actually less than ours. And so we need to put things into perspective, I would say. And with that, let's look at where the markets are this morning. So it's 8:26 a.m. London time. And we'll start with gold and silver as usual. And I'm going to look a little bit at the technical picture today, technical analysis. I've done technical analysis quite a bit in the past. I haven't really looked too much at the technicals. Just wanted to show you a daily chart of gold here. And I've put up some moving averages, the 50-day, the 100-day, and the 200. So the 50-day is the black line, the 100-day is the red, and the green is the 200-day. So there's a couple of things here that I think are looking encouraging. If you look at the move we've seen in gold higher since the beginning of November, it's formed like a flagpole, and now we've got a flag forming. So usually, and I say usually, not all the time, this formation results in a move higher after the completion of the flag. When it will be complete is difficult to say, but usually it's when you break the recent high, which was in the middle of November there, just above 1780. So that would be a good thing. In terms of the moving averages, getting back above the 200-day, which is the green line, is a good thing. But also the 50-day going above the 100 and then over the green is a good thing. It's like a cross. So we're not near there, but you can see that the 50 days starting to move up, starting to catch up with the longer term moving averages. So in a short term move higher, we want to see the 50-day above 100, the 100 and the 100 above the 200, and so on and so forth. And this is short term, of course, short term picture. And like I said, anything can happen, but it looks interesting. It looks like we could make a move higher soon. I don't know what the trigger is going to be. I'm just looking at the technicals. So yeah, right now we're up $6, just over $6 in gold at 1756. High's been 57, the low 46. So we're still like consolidating here, the flag movement. So I expect to see fireworks if we're able to break above 1780. Until we do, it's going to be up and down, I would say, in the range. And of course, that's completely different from buying physical gold or even silver, which we're going to look at. This is just for people who might want to have an idea what's going on. You might even trade paper gold, which is something I don't. I used to many years ago. Anyway, silver is up 11 cents. So it's outperforming slightly gold. It's at 21.36. High's been 39 and the low 16. And silver looks very similar. Same kind of scenario here. The bull flag doesn't look as pronounced as in gold, but as you can see, we're basically in a consolidation between 22 and 21. 22 will be the key level, of course, if we can break through that level, a little bit like the 1780 in gold. To the other markets here, the Dow futures up 50, NASDAQ futures up 30, S&P 500 is up 7 points. To the currencies, we've got sterling up about 0.2 at 119.69. The euro is up 0.2 as well at 103.50. And the dollar is unchanged versus the yen, 138.70. Dollar is unchanged versus the yuan at 714.30. Quickly look at the ruble, where the dollar is against the ruble. Yeah, the dollar has come off a little bit. It's now at 61. I think yesterday we were at 61.50. So not much move there. To the other currencies now. Aussie dollar is up a third at 67.08. The dollar is down 0.1 versus the Canadian, 135.65. And the Kiwi dollar is up a quarter at 62.20. And now to the general commodities. And we're going to look at the natural gas first, the Dutch TTF, European Nat Gas futures, because I think that's important in terms of the UK energy situation and the energy providers. I've got this chart here, 2-year chart. And if you look back to December 2020, this was trading at 15.59 euros. And right now we're almost at 150, which is 10 times more. So yes, it has come down a lot since the high in August, around 350. But it's starting to pick up, which is not encouraging. And as that company, Centrica, and their CEO said, we could see some more energy providers go bust. And they started going bust last year, way before what happened in the Ukraine. So there is a problem, of course, in that market. And right now we're at 137 in the Dutch nat gas futures. We traded below 100 recently, and it's now starting to pick up. Let's have a look at crude oil. WTI crude is up a quarter at 78.50. Brent is up a third at 84.52. High-grade copper is up 0.1 at 364.20. And US nat gas is down 1% at 716. Let's quickly look at the bond market. And I noticed that yesterday yields spiked higher. Yeah, and gold and silver stayed relatively stable, which is encouraging. Right now, the 10-year yield is down 1.5 basis points at 373. The 2-year is at 447. With that, I wish you all a great day. Take care. Bye.